Good Tuesday afternoon to you. Welcome to the John Sanchez Show on News Talk CKOH. It's a pleasure to be with you and a pleasure to be with my co-host. Around the horn we shall go, Mr. Dwight Millard on Q Home Loans. How are you, my friend?
I'm doing fantastic, John. As always, how are you?
Fighting the battles.
Yeah, I know.
Fighting
Keep that
the
smile
battles each
going,
and every
right?
day.
Yeah.
Yeah, that's all we can do, man. That's all we can do. I got to be honest with you. When I was jotting down my notes of where the 30-year mortgage closed at today, I'm like 629, and that's down. I'm taking your thunder away, down 7 basis points. So you guys were at like 635 or so the other day?
Yeah.
634,
Yeah.
635?
I mean, isn't that crazy?
Holy
And just
moly.
less than probably 2 weeks ago, a little over 2 weeks ago, about this time 2 weeks ago, we were at 599.
Yeah. Amazing.
It's amazing how fast it goes.
Love to get your take on it ahead of tomorrow's. Yep. I'd love to get your take on it as we get close to tomorrow's FOMC interest rate decision. We'll tell you what everybody is predicting on that side of it. But let's bring on our other co-host of the day, was Aaron Clark of Edge Realty. How you doing, Big A?
I'm doing great. Enjoying the weather. 85 this week. Did you see
Yeah,
that?
no kidding.
We should be golfing. Can we do our show like on the golf course on that day?
Golfing, out on a boat. Yeah, anything. I was just talking to a buddy of mine right before the show who lives outside the Atlanta area, and he's like, yeah, it's about 40 degrees right now, and it's getting down to 20 degrees at night. I said, well, we've kind of flip-flop, because that's normally the way it is here in Northern Nevada this time of year. And yeah, it's just crazy weather across the country. Absolutely crazy weather. My goodness.
It's definitely pushing the real estate market into spring mode for sure.
I was going to say, yeah, it's got to be bringing people out that are like, nope, not waiting around for, quote, the snow to melt, because there is no snow. And we're probably not going to get any, maybe one more little dusting, but I don't think anything major is going to come our way for the rest of the year, which worries the heck out of me, because this is melting the snow very, very fast for us farmers that we don't like to see that. So, but yeah, is that what you're seeing at this point? Are people starting to come out of the woodwork?
Definitely.
No
and a lot of sellers that were waiting for that springtime to come and the grass to turn green and the flowers to bloom. They're like, it's happening. Get the photographer here.
My gosh.
Yeah, so definitely happening.
Incredible. Yeah, wow, fascinating. Well, love to get your take on that in more detail as we go down the hour here. All right, folks, let me tell you what we have lined up. We're going to give you the stock market recap, of course, which really was not a very interesting day, which I'll absolutely take it. Lord knows we've had our share of volatility here lately. Even the president spoke today out of his office and had Rubio and J.D. Vance, everybody sitting by his side, and really just talking about how upset he is and disappointed that we're not seeing many allies come to the rescue of his plan of wanting other countries to help assist getting ships through the Strait of Hormuz. So he had some pretty harsh words about that. And oil spiked a little bit on the news, but then back down. Oil wasn't a major factor. Matter of fact, we only gained $2.70, $96.65 a barrel. We actually broke $100 again overnight, but that seems to be that's 2 days in a row now. It happened Sunday night, happened last night. We're seeing oil break above 100, and as we're tucked into our bids, but oil pretty much trades 24/7. And then the market, rolls around and we're like, okay, usually backs down into the high 90 range. And I think, guys, I think if we can get this oil to settle anywhere around high 70s, low 80s, frankly, I hate to say this, but I don't think anyone's really going to be thinking much about the war or what goes on unless some outlier story happens. It's just, people become accustomed to it. Again, I'll be 100% transparent. I am shocked. Absolutely shocked that this market is holding up as well as it is with these oil prices where they are. But it's not so much the oil side of it. It's just everything that's looming. I mean, UAE got attacked again today, another major attack, and just everything going on and on. And something that the president said, that back to that meeting that he had, that kind of concerns me. I don't know if you guys saw this, but he said he was really disappointed. He contacted basically the UK and said, look, we need some help. We've put out the call to all of our allies and NATO and so on and so forth to help us. But what we really need is we need some minesweepers. And I think they offered an aircraft carrier. So he's like, no, we don't need your aircraft carrier. We need minesweepers. And I thought to myself, is that really something that you want to say to the world, that we're lacking minesweepers? Because without minesweepers, there are going to be no ships that are moving, right? There's been a few that have trickled out. There are going to be none. And so if you're Iran and you're hearing that, you're going, okay, so they don't have a lot of minesweepers. We know how to hit them. That's exactly right. So I don't know. I didn't see anybody else make any comment about that, but yeah, I just thought that was interesting that was the case there.
Well, and do you think, John, because I know we've talked about this in the past, but because trading has become more algorithmic. I don't even know if that's a word, but you have less people that are getting in and doing things emotionally in response. So since, let's say, maybe 10 years ago when something like this would have happened, or
I think you have a very valid point, but I think the other thing too, people realize that in a worst case scenario, we are a net exporter of oil. We're not a net importer anymore. And that's one thing, Aaron, that's really changed a lot since the last oil crises that we've had in the past. We were relying upon bringing oil, importing oil in, that doesn't make sense, importing oil. Now we're a net exporter. So I think in the back of people's minds, they're going, hey, you know what? If you know what really hits the fan, we've got enough oil here at home that we can do it ourselves. We can take care of our country, which was the whole idea behind it. So I think you got that factor. But back to the algorithms, I think that's a great point you bring up. I think people now, and I'll break it down. We got to look at two classes of investors. We got to look at the retail investor, then we have to look at the institutional. The retail investor, they're not really concerned. I mean, our phones are not ringing of clients being panicked about what's going on. Hopefully, it shows we're doing a good job and have them well diversified, and they hear the show every day. They know what's going on. But normally, in years past, when you had a war going on, people were very nervous. You'd get a few clients here and there that's like, you know what? I don't care how great my portfolio is. Get me the heck out. I don't want to be a part of it. That's just not happening. It's just not happening. So I think the retail investor is very calm. They're continuing to do what they do because, as you and I and Corey and all of us have talked about, as long as they have their job, as long as they're not seeing their 401k plummet, 10, 20%, they're going, hey, you know what? I'm okay. I can live through this. And yeah, it hurts a little bit at the gas pump, but hey, it's temporary and so on and so forth. So I think the consumer is not panicking whatsoever. None of the data we're receiving is showing the consumer's panicking. University of Michigan consumer numbers or consumer sentiment numbers, none of it is showing the consumer's panicking. So retail investor doing well. Institutional side, you know what? That's where the algos really kick in, Aaron. That's where you've got a lot of algorithmic trading going on in the stock market, obviously in commodities and so on and so forth. And they're the ones that are swinging this market, dramatically. So it's what I'm seeing is they're coming in and they're trying to either run the price up or really run it down. But there's the algo on the other side. Every time they run it up, here comes an algo that brings it down and vice versa. And that's why we're really not getting anywhere. And I think that's why you're seeing thinner volume, of course, after hours and overnight. And that's why you're seeing, it just takes a few trades on the buy side to jump that price back up above 100. And then when the human beings sit down at their desk, the commodity traders, the next morning, they're like, you know what? No, we're going to bring this thing back down.
So really, you're seeing the offsetting sort of.
You really are. Really are because remember, the algos are programmed. If this happens, we're going to buy. If this happens, we're going to sell. The human being sits down and goes, okay, wait a minute here. Yeah, we know the strait's going to get opened eventually. Trump's asked for a lot of countries to help, even though no one's really stepping up to do it. So as a human being, right, we rationalize. Yeah. We look at the positives, we look at the negatives, then we make a decision. So I think the human emotionalist side says, hey, let's keep this oil under $100. Algorithms, of course, they have no feelings. They want to run it up or do whatever they want to do for whatever reasons, because all they are is they're just programmed. If this happens, run it up. If this happens, sell it off. Yeah. So it's a real interesting marketplace to be in. Controls what?
The big swings, you mean?
Oh gosh, the institutions, hands down, the institutions. Oh yeah, exactly. Oh yeah, yeah. I'm trying to remember the stat. I'll look it up at the break, but if I remember, don't hold me to it. I think 70% plus of all trades just on the New York Stock Exchange are done by institutions, right? In computer trading, right? The algorithms and things.
I would assume
the retail investors don't have the algos. Yeah, I mean, few people do, but correct. That's right. That's right. Because there's no emotion, right? And that can be the positive side to algorithmic trading, right? There is no emotion. You can't go, oh my God, whatever, rationale you have. Algos are just going to go, yeah, if this happens, we're going to do this. If that happens, we're going to do that. And you go from there. So it's an interesting dynamic, guys. It really is.
Now, did you see the article that was talking about how they're doing like rolling oil blackouts in various countries to conserve on oil and gas?
Yeah, I did. And I talked to I think I mentioned this on the show last week, Aaron. I talked to a client who spoke with somebody, relative or a friend or somebody in China. And they said, and I haven't seen this on the news, but they said, the lines are like a mile long, quote, quote, in China to get fuel. We're not seeing that because you got to remember, China gets 90% of their oil coming through the strait.
But you would think you would get more effect from the economics of these other countries being so loud in their sort of doom and gloom scenarios that would cause big swings. But like you said, the market isn't reacting like you would expect. So I find that fascinating.
Not at all. And I'll be honest again, my fear, and I think I mentioned this when I did the weekly recap on Friday, my fear is there's something looming out there. Mm-hmm. My gut tells me, after doing this for so long, I can't see that we're going to escape this with just this little damage. I mean, up until coming into this trading week, we were down just, I'll round up the numbers, roughly 5%. 5%. That was
Yeah.
it from our highs, all-time highs. We're not that far away, right? And we saw some big moves yesterday and so on and so forth. So we could get back to that. And again, it's just all the cards are lining up for this to be, a good sell-off. I keep saying this market is very posed to have a flush, right? That's where, once again, you get one of these dramatic 1,500, 2,000 plus point drop days just out of the blue. And that's one of the big fears that I have, that we haven't had that during this time period. And there's a lot of issues. I mean, this is a global situation. This isn't just one country. This is one country that's controlling, again, 21, 22% of the world's oil supply, and can't get the ships really moving at this point. So I don't know. I hope this is one time I absolutely hope that I'm wrong. Please trust me. I hope I'm wrong, but it just feels like this has just been too easy, just way too easy. When we started bombing that island, that big shipping terminal on Friday, I thought, okay, here's where it goes. The other part that's got me a little concerned, we just sent 5,000 Marines. Okay, what's going on? Why are we sending 5,000 Marines there? Are we going to do a ground assault, which is, God forbid, a whole nother significant chain of events that none of us want to live through again, right? We've seen that before. So yeah, so it's a lot of moving parts at this point. But real quickly, before we go to break, let me tell you what we have lined up. Everyone is focused on home prices and interest rates, right? You hear Aaron, you hear Dwight talk about this every single week. But here's a little thought for you. What if the biggest real estate opportunities right now are sitting there right underneath our noses and no one's even talking about them? Aaron did a phenomenal job a few weeks ago. We kind of talked about pocket listings and some other things. But what we're going to do today is the boys are going to be uncovering some hidden ways that you, as a real estate investor, we're not talking your primary home, we're talking as an investor, can make some money in this market, right? Because those who see it early could obviously have a major advantage. And as Aaron said, they're coming out of the woodwork. I hope you've been listening to these guys' advice for the last month. This is going to be an early buying season. Get ready, sellers, get ready, buyers. And you just heard Aaron mention it. It's already happening because of the warm weather that we're getting. So if you want to get into something, this is the time. Dwight, of course, is going to tell us about mortgage rates when we come back, his strategy on that. Aaron will tell us about his strategies and how we uncover some of these homes that, like Aaron mentioned a few weeks ago, and we're going to go a whole different direction with him. A lot of homes that don't even make it to the MLS listing. Usually those aren't the big deals, the big savings. So, but he's got some good ideas for you. We'll share that with you when we come back. Let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Kristen, welcome back to the John Sanchez Show on News Talk 780 KOH with Dwight Millard of On Q Home Loans and Aaron Clark of Edge Realty. All right, like I said, kind of boring session today. Man, oh man, need some action here. 47-point gain is all on the Dow closing. Yeah, I know. Yeah, that's the truth. I know. Glutton for punishment. I think I'd have enough of it for the rest of the year after what we've gone through these last few weeks. 46,993 is our closing level of the Dow. Nasdaq rose just 16.25%. Yeah, looking a little bit better, 105-point gain, 0.47%, and up about 0.67% on the Russell 2000. So I said oil up $2.70, $96.65 a barrel, $7.20 gain in gold, $5,007.50. Down 2 basis points on the 10-year at a yield of 4.20. And Mr. Millard, I apologize. I let the cat out of the bag on your mortgages. Go over that again, please. Yeah, you are. But you didn't have a word a couple weeks ago. So I've got a question for you. All right, so we have a Fed interest rate decision tomorrow. Wall Street's like, obviously nothing's going to happen. I think Jerome Powell, of course, these are winding down to his final meetings. I think he's going to do everything to kind of keep the markets calm. And obviously, Fed's looking at data. That is not the month of March's data when this war started. So we can't see any impact to inflation or anything like that due to higher oil prices. So I think they're going to say we're data dependent. We're going to see what the March data looks like come April, come May, that type of thing. And, they're not going to do anything at this point. But, you're involved in a lot of different bond and mortgage related services. You have, 40 years of experience. What are you seeing? What are you hearing from your counterparts, et cetera, where these rates are going to go now that this has changed, right? The Fed is out of the picture. December is what I'm hearing right now, if anything, and that's less than a 50% probability as of a couple of days ago. I haven't seen the last couple of days. But bottom line, let's just say if you're lucky, one cut this year, if not lucky, But we have Kevin Warsh, of course, the new, if he gets confirmed, of course, he may surprise us. As I said, I wouldn't be shocked if he sat down at Jerome Powell's desk, which will be his new desk, and cut rates the first day on the job, to especially if this war is still going on. But what are you hearing right now, Dwight? What's your prediction in the industry at this point? Right. Are you? Oh. Mm-hmm. Right. Everything came to a halt. Aaron, I want to go up north with you real quick before we go to break. I want to go up to the state of Washington. Their Senate over the weekend passed the new millionaire tax. Now it still has to go to their House and then to the Supreme Court, so it's a few years away. This is terrifying. I think this is something. What we've seen in the past is when something gets passed in a large state like Washington or definitely California, it just seems to kind of spread across the country to Democratic controlled states. So the reason what I want to ask you is, so there's supposedly only about 20,000 people that make more than $1 million in the state of Washington. They're now going to be paying nearly a 10% tax. If you make $1 billion, then I think it jumps up to 20%. They're saying, a lot of businesses, I mean, remember we got Amazon headquartered there. We got a lot of big businesses that are saying, not us. But they're also seeing a lot of people that are starting to pack their bags and not really talking about it until, probably not going to do much till the Senate passes it or the House passes it. But are you getting any calls? The point I'm getting to, any calls whatsoever from people moving from Washington to Nevada?
No, not so much like as a direct result of that. Historically, yes, people see Nevada as sort of a haven, especially just as Californians have done so over the past few years, especially since COVID. But I do suspect that as some of these states are changing rules and regulations where it's going to cost people more money to do business and live there, etc., that they're going to be attracted to Nevada. We've seen it. Nevada is a net positive population increase state, which to say that as a whole comparison to every state in the U.S., it's a big statement to say that. I mean, there's only I think the last time I looked, there's only a handful that are net positive. And for those that don't know, that means that we're getting more people coming in than are leaving, and it's a positive number of growth. So because of that, I think we're here to stay. I think we're going to see that growth. Absolutely.
Unless we turn around and do the same thing.
Yeah. If we do the same thing, then, I mean, I don't know.
Well,
we might see people leave, but if we do the same thing, we might be the last ones to do it, to where people are like, well, I'm here now. Where else am I going to go?
I know.
So
it worries me. Anything's possible.
It does worry me. Yeah.
Yeah. Well, guys, this boils down that we got to run. This boils down to what we've talked about so many times, and that is, you look at the amount of job losses. I mean, just Meta yesterday said they're going to get rid of 20% of their workforce. I equated that to almost a little over 15,000 people, right? On top of the similar size layoff they did last year, right? And they said because they're spending so much on AI. And what I've said over and over again, we look at it from a Wall Street perspective. We look at it, oh my gosh, this company announced a layoff, that one did. But you know what no one talks about? The cities, the counties, the states, the governments that no longer have that revenue, right? From the payroll taxes and obviously the sales taxes and everything else that a working human being contributes to the society. So I think you're going to see more and more. We've heard it here locally. You're hearing it now from other states that they're financially hurting. They're running deficits. And so if that continues, we know the job losses we just scratched the surface. Like I said on the show yesterday, I'm so confident we're going to see our normal is going to be a 10% unemployment rate when AI really kicks in. So what are these states, counties, governments going to be doing for revenue? There's only one thing they can do. That's if they don't have a state tax, they start one, or if they have a state tax, they bump it up and get their money like they always do from the higher income people. And I mean, Democrats are trying to put in through a rule right now that if you make $45,000 or less, you pay zero income tax. That's what this senator is trying to push through the Senate right now. So things are going to change, right, Aaron? On AI, I mean, you're as dialed in as I am on it. It's changing the marketplace in more ways than one. It is. All right, when we come back to hidden real estate opportunities no one's talking about, Aaron's going to enlighten us, as well as Dwight. Let's turn it over to Jack Saban for news, traffic, and weather. Hello, Jack. Welcome back to the John Sanchez Show on News Talk 780 KOH with Aaron Clark of Edge Realty, Dwight Millard of On Q Home Loans. Dwight will be chiming in just a moment. Let's give you a recap once again of what happened today. 46-point gain on the Dow, or 47, excuse me. NASDAQ rose 105 and the S&P up 17. All right, we're going to get to our topic today. The hidden real estate opportunities no one is talking about. You've heard it over and over again from the guys. Look at the best deals that are out there. They're not ones that you're going to find on MLS or anything. They're going to be these pocket deals. You have to right now, right? Everyone's in the same boat. Everyone's sitting on the sidelines going, I'm waiting for rates to come down. I'm waiting for housing prices to come down. Aaron had a great opening at the beginning of the show. Looks like spring is here. I mean, we all know that in Northern Nevada for a while, don't be shocked. Obviously, we have another storm or two, but for the most part, I think people are now mentally starting to shift, right, Aaron, into the spring buying mood. So what we're going to be talking about is this. We're going to start off and talking about the setup, which is you. Let's get into your mind a little bit. Now, Aaron, everyone seems to, of course, always be chasing the same deal, right? Smart money moves where the other money is not going, meaning they're lifting up the rocks. Just like what Corey says, he's up at 3:00 every morning searching deals and so on and so forth. Let's start off with this. Let's get right to the bulk of it. Where are investors not looking at this particular time, Aaron?
Oh my gosh, what a loaded question.
Where
Where they're not looking,
get the ball rolling.
So here's the thing. You brought up a great point as the topic title, which is, they're not the mainstream deals. So when you have investors that are out there that are looking and they're a little seasoned or they're with somebody that's explaining the process to them, you're not going to find them on Zillow. You're not going to find them on MLS. If they've already hit there, they're on the shelves at the grocery store. Everybody's seeing them. Right. Everybody's pushing their cart by them. They know what the prices are. They either want them or they don't. So in order to find those, you have to either be very creative and you got to use sort of a whole bunch of answers on various sites and things like that to deduce whatever you're going to deduce that something might be a great investment or not. Or you got to know somebody, or you got to get up at 3 a.m. You got to search all sorts of avenues to do that. And one of the main things right now is searching pre-foreclosures, or what we call like distressed properties.
I want to go down that path.
Like probates, estate sales, trust sales, things like that, because you have a lot of people, they're not so emotionally invested in it. They're more like just wanting to get done and be done, and they're probably going to have...
They want to move on with their life.
Yeah, they want to move on. They didn't live there in most of those cases, Unfortunately, mom, grandma, grandpa, somebody passed away.
Oh, interesting.
And so on a probate sale, for example, they passed away and they've got a whole lot of other things on their mind, like, funerals and settling accounts and things like that they just want to be done with the house. So finding things like that, searching the paper, looking for obituaries.
Okay, let's stop right there. Yeah. Because you gave me goosebumps as you were saying that. Let's Dwight, chime in here. So let's do this probate scenario, because I know Corey loves doing these. All right. John and Mary Doe. All right. John and Mary both pass away. Little Johnny is their son. Little Johnny is the only sibling or only child. He inherits the house. Definitely not a house that little Johnny wants to live in. So now they weren't smart enough. I shouldn't say that's rude. They weren't financially savvy.
Prepared.
They weren't educated enough.
Yeah.
They didn't listen to the show.
Yeah.
And therefore they did not have a living trust. So therefore that home is going to probate. Little Johnny is going to spend a bunch of money with attorneys and courts and everything else. Now, Mr. Aaron Clark, real estate agent extraordinaire, talk to me your strategy. How do you do that? How do you take advantage of that?
So from a buyer perspective, finding those is kind of the first step of the part that they have to be advertised. Those will actually be on the MLS. Because they will be on the MLS and people want to move them quick, they tend to be at a pretty discounted rate. But here's where the caveat is. Once those get into contract, so let's say, for example, that house is on the market, we have it listed, and at that point in time, we're just trying to get it into contract so we can kick the probate into full gear and get the court hearing date and all that good stuff. So once we get into contract, it might be, it might be $100,000 under market value, let's say, or $50,000 under market value. We're in contract. That buyer's doing their due diligence. We've ordered the court hearing date to approve the probate. Now we have a date. At that date, it's open for bidding. So if we're under market value by, let's say, $100K, we get to that court hearing date, you can show up and be a buyer who's ready to pounce. And most likely the buyer that's in contract, if they're, especially if they're not too savvy, they're not going to bid higher than what their expectation is. They have a very simple expectation. I'm paying, it was listed for $400. I wrote an offer for $375. They accepted it. I'm paying $375. So when the judge says at the end of the hearing, all right, is there anybody here that would like to bid against the property? We'll start the bidding from $375 to $380. They kind of go into shock. They don't even understand that process is happening.
I think a lot of people don't know that, Aaron.
And then a buyer can bid. I'll pay $380. I'll pay $385. It'll go. And I've seen them. I've seen them go up $100,000 more than what they were because
what a shock that would be to that buyer.
They just wanted to get it in contract because they wanted to get it to the bidding.
So the court has an obligation
to make sure it's
But
the
why?
highest amount of money to the
But
estate.
why? What's the incentive for the court?
Odd.
Why does the court care?
Think about it. Let's say I have a property that's listed and John and Mary Doe, whatever, we get into contract. John and Mary Doe's next of kin, they think they're going to do a smoking deal on it. It's worth 500. They're like, oh, we're going to buy it for 200 from the family, and then we're going to turn around and sell it for 400, and we'll put that $200,000 in our pocket. This ensures that it's going for fair market value. It sort of protects the estate from any sort of backhanded
It's
fraud.
not so that the beneficiaries get the most amount of money
Well, I mean, they
or anything
do
like
in
that.
turn because
Right, but
you're
that's not the
stealing
intention of the
it.
judge.
But before, I could go in there and be like, I get my buddy at the bar to go bid, go buy my parents' property for pennies on the dollar. No, we as the listing agent, we do in, working with the attorney. So like for me and Corey, we usually wait until the buyer's done their due diligence, and then once completed, then we'll let the attorney know to order the hearing date. Depends on how busy they are, how far out. Usually it's a month. It's not that crazy because you don't want to order the hearing, which costs money for the attorney to request it and file the paperwork. And then we get to the 11th hour of the hearing, and then the buyer goes, we did inspections and we found asbestos. We don't want to buy it now. And now we're canceling the hearing, which costs more money. So it's all about being prepared and doing things so that you spend as little as possible because it all comes out of the estate.
Real quick before we go to break, Aaron, have you seen some, to use your terms, some smoking deals come out of probate court?
Not
or does
smoking,
it kind of end up in the wash?
Good icebreaker deals. Good deals where you can come in. You might be able to save
good markets,
50
bad
grand.
markets. People are always dying and go. States are going to probate, so
and
that's a good
and
all-weather
they're
strategy.
ugly. So if you can see past the ugliness, or you have some special skills, you can make a good chunk of money on those. Those are great foot in the door type of investments.
All right. We want to squeak out one more out of you and some good strategies on the financing side with Dwight when we come back. Let's wrap it up with Kristen Snow right now, Traffic Center. Kristen, welcome back to the John Sanchez Show on News Talk 780 KOH. Well, I've made an executive decision. We're going to stay on this probate topic. We're having a heck of a discussion during the break, and the knowledge that Aaron has in this is absolutely amazing. So I don't want any of you to miss out on what he was telling Dwight and I off air because it's nothing private. But maybe on Thursday we'll continue this topic and we'll look at some of these other areas again where we're looking for real estate opportunities. Aaron, I want to. Guys, before we do, Dwight, let's get your phone number. Thank you, sir, Mr. Clark. Thank you. All right. So we're talking about the probate process. Aaron enlightened us to the entire process. Aaron, take 20 seconds if someone just joined us and talk about the estate planning. The probate process. How, again, you can find, as you said, not a lot of times there's not, quote, smoking deals, but you can get some good deals, good values, that type of thing. But there's a lot of things that can go wrong, like everything else. So real quickly, recap that, and then let's continue our discussion.
Yeah. So if somebody owns a home and they don't set up a trust and they don't include that home in that trust, and then they pass away, then it's going to go through a process called probate. Probate is where basically the state decides what happens to that. They're looking for next of kin, who the family members are that are going to profit from that when it's sold, etc. And then because of it, we have to follow regulations. We have to advertise it. It will get listed on MLS. There has to be a notice where people can come and look at the property and things like that. And then at the very end, upon the completion of the transaction, they have to open up the probate to what's called an overbid. And they have to see if anyone there is willing to pay more than what the contract price is.
And Aaron was telling Dwight and I that he has seen people kicking, screaming, throwing things, cussing people out because that buyer thought they had it all locked in. They show up at the probate hearing, and here comes some buyer out of the woodworks and, old relative, whatever the case is, and blow the whole deal. So, yeah, that's fascinating. In the judge, his sole intention is, again, to get the largest amount of money, hence why they open it up to the bidding process.
Yeah, I mean, it protects the estate because, before you had overbid, you could have somebody come in there who's your buddy, and he was bidding on the property or getting into contract for way under market value.
Right.
And then the two family members that were the long lost next of kin are turning around and selling it after the family estate gets settled as their own, Right. So you had stuff like that happening. So the overbid process is what basically protects for that.
Dwight, have you ever had someone come to you and say they want a pre-qual letter from you because they're going to a probate court to bid on a property?
No.
Okay. So pay cash initially and then refinance it.
Yeah, the probate has to model whatever the contract is. So if the contract is in contract with a conventional loan, for example, because that's how they bought it off MLS, then once we get to overbid process, whoever's bidding on it has to have an equal to offer. So they can also use a conventional loan to purchase the property. but they do also need to close the property and have the contingencies that have already been met completed. So if they got an appraisal, for example, we go to overbid, the new buyer bids with the conventional loan, they need to be able to not have the appraisal as a contingency so that they could close in the exact same spot.
Can they do their does the court give them a due diligence
time period? They have to
period?
accept that whatever's completed, it's the same contract, but higher bid. So they do not get to do anything that the other buyer has completed, which is why we don't go there until it's all done.
Right. And tell the audience quickly about the real estate commission process, because this was a shock to Dwight.
Yeah, so a lot of people don't understand this, but the buyer agent who's representing the person who's in contract that gets all the way to the hearing date, if they lose, their client loses to an overbid, they still make half of the commission per NRS. Yep.
For all that work.
Yeah, which is good. I mean, that's what it's for. And I have to disclaimer, I'm not an attorney. You should contact an attorney to discuss probate.
Absolutely.
This is all for entertainment purposes, yada, yada.
Yeah. Well, again, that scenario, Aaron, obviously all that can be avoided just by having a trust and having it properly funded, meaning
everyone should have a trust.
Absolutely. And if you don't, we're going to give you a solution here in a few short weeks, right, Dwight? Get that handled, because it's it's a long, expensive probate is a long, expensive, drawn out process. And as I've said 1,000 times, only people that win are the courts and the attorneys doing it. No one else wins in that scenario. Fascinating topic, Aaron. We'll continue this on with some more of your ideas on Thursday. Thank you, boys. Phenomenal job as always. We'll do it again tomorrow on the John Sanchez Show. God bless. Have a great afternoon.
John Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited, an equal housing lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.